Friday, April 11th. It is Masters Week. And I figured I saw this last night. I'd like to play this for you with kind of the audio, if you don't mind. It's interesting. So
Full day here at Augusta National. Peters 3 under, Gorgons 5 under, and f*** me, I am down $750,000 on a bunch of Chinese call options. God fucking absolutely beautiful swing here. Unlike the sudden swing in the yen, which
okay, it's good. You get the idea. I will put it in the newsletter so that you can see it. It is unbelievably funny, and it's perfect. I mean, it's Masters Week, and yes, that's what I was like yesterday. Let me just kind of go over. I'm going to put a chart up while I talk about this. The fun part of yesterday was reading my high net worth group. This was a good time that I had. A bunch of these people are planning to go to Berkshire's annual meeting for fun. Just to see, they want one last chance to see Warren. Many of them have never seen Warren Buffett in person. And so they're paying exorbitant amounts of money to go to the annual meeting. The insight that I have, rich people are kind of strange, sometimes weird, but it made me think maybe I want to go to Omaha. I don't know. I mean, I got the means to. So I was commenting with some people in there yesterday. Yesterday wasn't a good day. My journal says, shut up and buy was an absolute mistake. I'm kidding. The stocks that I bought, I went over the paid newsletter subscribers yesterday. You want to know how to get to the paid newsletter? You basically go to dailystockpick.substack.com. Okay. Sometimes I post a separate video, but the paid one is always on here. Now that the paid one yesterday was at 35 minutes. Okay. It was at 35 minutes, where it kind of slips into the paid newsletter. And it's just, a little song that kind of played and a little transition, but that's how you get to it. And I forget who found it, but I do kind of point out here, paid members get it. I gave you a financial independence retire early tip. And I kind of showed you the tools that made me go and buy them. Damon pointed out yesterday, and I'll go over this in a little bit, but Damon pointed out, I gave you all the stocks that I bought yesterday in the regular podcast. So I'm the worst secret keeper ever. Worst secret keeper ever. I'm going to go over S&P levels, try and make headwinds of the market. The direction hasn't changed. We saw yesterday, the direction hasn't changed as I thought. So either we're seeing a sideways trade or a continuing down trade. So it makes no sense to continue to put money in. I'm just, I may continue to put money in, but my outlook is super, super long. I'm keeping an eye on some stocks. Apple at 180. Good God. China retaliated. Apple's trading at 190 right now. It may make sense to actually sell it. Unless if Trump, remember, we're in a market where you could absolutely 100% see a tweet and all of a sudden Apple is at 250 because they're getting exempted from China tariffs. It's not out of the realm of possibility. So I want to make sure everybody knows I am 65, 70% in the market. I haven't done the actual look, but yeah, it doesn't mean that I'm out of the market. And I don't think you should be either. And there was a great Facebook in the Facebook group. There's a post from Dave Ramsey in the 2008 time where a guy with $2 million says, Dave, I want to sell half my stuff. And he says, well, the stock market's down 30, 40%. I understand the fear. Don't do it. And it's easy for Dave Ramsey to say that. He's got confidence. He's in almost all real estate and S&P tracking funds. So it's easy for him to say that. When you've got single stocks, you've got significantly more risk. So again, do with it what you want. But yesterday wasn't a great day. It kind of just pointed out stock index futures rise, yields mix as China slaps 125% tariff on U.S. goods. Come on. It's an actual war at this point. It's just an actual back and forth war. So yesterday I did get an alert. It was something that I have alerted paid members to a long time. I did get a Trendspider alert. It comes in both email and on text. And I'm going to be going over that for paid members. I'll go over what the alert was about, how I'm using it to trade. This one this week has moved up the stock 17%. I had a strategy around it. It reached it. Boom, I'm going to update members about it. Remember, just let me make sure everybody's aware that paid members, I try not to kind of be that douche that puts paid members behind a paywall, but paid members are supporters of mine. I do things behind the paywall during crazy, I try to put them out there during crazy times like we've had the past couple of weeks, just to make sure that people are confident and you don't have to pay me. But putting information behind a paywall is not a dick move. It's just something that happened. I didn't plan on launching that paid newsletter. It just kind of happened and people signed up for it. People are getting benefit and they like it. So I don't want to be that dick that puts it back there. I'm not a grifter. I'm not a douche, but I am somebody that has paid members. So just understand that I am going to put some stuff there. But I wanted to show you how to set up an alert. So, there's a couple of ways you can set up an alert. Okay. Let's look at the Liberation Day strategy right here. Okay. There is an entry to the left in Trendspider, and I can say, alert me next time this happens. So it takes the entry right here, and all I have to do is say alert, create alert. It's as simple as that. I don't need to know when it's going to tell me to do this. Okay, I can go to QQQ and I can say, hey, this liberation strategy that I just created that makes me 302% over the last 9 years versus 322% buy and hold. It hasn't got me in, got me out with a nice 8% gain during this incredibly tumultuous time, March 3rd. It seems like it's good. Well, I want to know when it gets me back in. I click these 3 dots. I say, alert me next time this happens. And I can name it Cranky Macintalk. I can put in a note. It comes to me via email. If you're a boomer, you can get an email. If you're a Gen Zer, you get a text. It's as simple as that. It's super, super easy. Now, I've also said nothing good happens below the 200 day. So you want to know how to set an alert on the 200 day? Well, just click on it. Let's run this, QQQ right here. We're going to run the 4-hour algorithm if it pulls up right there. And we'll just click on the 200 day. Create an alert at this time. It will do it. So there are plenty of ways. Go and look up Trendspider. Go over here. Okay. Click on this link, this top link, and you can get 40% off the premium level for a quarter. Okay. You can try it for 14 days for $29. I think the standard is even $20. Okay. There are 3 levels: standard, enhanced, and advanced. I suggest the premium version and the premium version. Standard, enhanced, and advanced. I think premium is just one of the other ones, but premium is the one that I suggest. You can get whatever you want, see which one fits what you want to do. And you can sign up for quarterly, at $378 every 3 months or $655 for the year. During this time, I have saved way more than $655 because you know what? QQQ during the Liberation Strike got me out March 3rd. I didn't have that. I've actually created this. I wish I had it. Now you have it, so you'll know when to get back in. And again, it almost rivals buy and hold. It's a good strategy. Okay, I like it. Now, I got an alert. Like I said, I got this alert on Newmont NEM, and I alerted paid members about it. I will alert them today. I got the alert. I told them to set up an alert in Trendspider or whatever platform they have. It was very simple. I'll update them on it today. But it was good. Now, I want to go over this article that I found in Seeking Alpha. Again, another tool that I use. This is a great article on gold, okay? It's about how Nixon, back in 1971, stopped countries from actually claiming gold. I never knew this story. This is a fantastic read. I mean, it took me all of like 10, 15 minutes to read. It was unbelievably insightful as to why gold is actually probably a fantastic investment. A fantastic. How Nixon ended the gold standard, how countries could reclaim gold as a standard to restore confidence in fiat money. If countries started claiming gold again, the US dollar would absolutely crash. So don't think, Trump could try and stop the redemptions. It could further cause chaos. Fascinating article as to why gold is a good hedge. And I want to read you this. What would the gold price do if we had another monetary system? Oh, let me read this portion because there might be some people listening and not necessarily looking to the video. Nobody took Wanderwitz seriously in 2012, but now the political climate fosters mistrust in a global fiat financial system entirely dependent upon trust. The thought that Germany or other countries be denied their gold by closing yet another gold window suddenly does not sound all that preposterous. What's to stop a decree that no gold will be allowed to be exported out of the U.S.? Historical precedent already set by Roosevelt in 1933. Roosevelt's decree also confiscated to the government all the gold held by anybody in the U.S. Trump has already talked about, the gold that's being held in the U.S. Roosevelt's decree also confiscated any gold. I declare that gold is confiscated. So the next quote that I want to read you from this article. What would the gold price do if we had another monetary system event where the fiat monetary system fails on trust and gold makes a comeback? A 19 times increase in the price of gold would move it from $3,000 today to $57,000. Looks absurd, yet this is what happened in 1971. Imagine suggesting an $850 gold price to people in 1974. That would have sounded absurd. The article, fantastic read. I'll link to it in the newsletter. And if you want, if you want Seeking Alpha, go to the link tree. Okay, you can get the bundle, which comes with Alpha Picks, which, by the way, we talked about, had a tremendous couple of days. And they put out an article last night how it outperformed the regular market in those days where you had ups. Okay, it might be down now, but the theory is good companies with good products, with good earnings, all of them, and good management will outperform the market when it bounces back, and it will bounce back. It's just a matter of when. But you get the bundle, you save $159. Or if you just want to read that gold article, go and click on this link, okay? Or you can click on the article in the newsletter, and you get $30 off and a free 7-day trial. It was phenomenal, okay? Now, I just showed you in Trendspider how to set an alert. Here's a volume by price indicator to spot key levels, highlighting the value area, the high, low, the point of control for each session. Import it. I'll include it in the newsletter, but you can import it into your system. Okay? Per session by volume price. It calculates per session volume by price using lower time frame data for distribution channels. And you can see the source code. It's a custom indicator. You could program yourself, or you can just input this. You can go into AI and program your own custom indicators if you want. I know many people who may be just starting Trendspider may not be that advanced, so they do it for you. Okay? You'll get a weekend newsletter with all the Trendspider strategies that I've shared publicly. I'll also identify where you can import them. So for today, I would tell you, if you're interested in Trendspider, go and get this 40% off. Okay. Or try it for 14 days for $20. Just make sure you click on my link, because once you get that newsletter to import all the strategies, sometimes there's problems if you don't use my link first. Okay. So import that one too. What happened yesterday? Yesterday, the market figured out that the Trump tariffs, they clarified them, and there wasn't much of a pause. I mean, just to put it very simply, Trump's 90-day tariff pause is not as helpful as it sounds. It's just not. They kept them on China. They kept a baseline 10% tariffs. We thought there was a pause, but they clarified, no, it's really not a pause. So that's a problem. That's a problem. Wall Street slides a day after a historic rally. S&P tumbles 3.5% and NASDAQ sheds 4%. It was a bad day. After the third best day since World War II, the market got a reality check as we're not out of the woods. Higher tariffs on China confirm that the trade war is still the number one topic, with rising risk of a domestic recession as uncertainty has already impacted supply chains. Especially the price action in cyclical energy stocks shows the mess under the hood. That said, if the Trump administration refrains from hiking tariffs and we get a tailwind from bond yields, which we haven't gotten, which saw strong demand during yesterday's auction, but overnight they spiked, I think tomorrow could be a good day. The good thing today, we got great financial news from the earnings from the banks. But here's the key, and this article points it out. Even a downside surprise in a key inflation gauge yesterday did little to brighten the mood. Before the opening bell, data from U.S. Bureau of Labor Statistics showed a minus 0.1% month-over-month decrease in March Consumer Price Index, which is the inflation. Okay? It's a problem. Wall Street volatility spikes. The VIX is still the key. You're going to use UVIXY and SVIXY if you want to trade volatility. Okay? There are strategies out there to trade that. The 4-hour algorithm has you in UVIXY at 23. Okay? 10 days ago, 9 days ago. Let's see, in pre-market, UVIXY, which is a triple leveraged ETF, on the upside of the VIX. So if it goes down, if the VIX is expected to go down, which more than likely it will, because it can't stay at 43, even though it's up right now 7%. I mean, it will tumble down, and SVIXY will be the time to get it. But because these are triple leveraged, use these as sparingly. Don't go in and buy UVIXY today on a freaking Friday and hold it over the weekend. You don't want to hold these over the weekend. But Wall Street volatility is key. Okay? The 10-year and the VIX are working in conjunction with each other, and you can trade both of them. You can trade the spreads on the 10-year. You can do all of that. The ironic thing is that with inflation falling like we saw yesterday, the Fed would be cutting rates anyway, but instead the bonds are going up. And the reason is because tariffs are gonna raise prices in this country, which will increase inflation. So the Fed is caught in between these two things. Their mandate is inflation. They need to keep inflation down. Well, tariffs increase inflation. So that's why the market is flip-floppy. We sit and hope something doesn't break, because right now you're stretching. It's like a water balloon that you're filling up. If Trump wanted lower rates, he could have them today with an actual 90-day pause. We saw what that did to the market. We saw what it did to the bond market. Instead, the policy and chaos of this administration, it's the art of the deal. And again, it's pushing the bond market. I have faith. You know, nothing is broken yet. Rich people are just less rich. Bill Ackman has shorted the market. You know, Besant, if he were in this, and we'll go over this with Scott Wapner, put it so perfectly. I don't find it surprising if my goal is don't find it a surprise if a tweet corrects the market. Either way. So you should have alerts. You know, you can set up an alert on Donald Trump's Twitter or Truth Social. I mean, that may be the market that we're in. The market is still signaling a recession. Overambition targets for the S&P, we can say 250 to 260 is a realistic number. And in a recession, the multiple might be 17. That's an S&P at 43.35. Okay, 43.35. That's a realistic number. Okay, 250 to 260. We came into the year with a multiple of 22, 24, somewhere in that neighborhood, and estimates of earnings up near $300. Earnings, 250 to 260. An S&P multiple in a recession at 17, that's realistic. SPY at S&P at 43.35, that puts SPY at 433. Yesterday, it closed at 524. If we got to those realistic earnings targets and the multiple came down because we're in a recession, that's still 17% downside from where you're at today. Have some money on the sidelines through earnings season. Remember, I am usually 90% invested. When I say I'm 40% in cash, it felt uncomfortable. I put more money in there, but I am in a comfortable place now. For the past 2 nights, I have slept perfectly fine because I had a plan. And Ben Carlson points this out. In 2011, during the European debt crisis, which is similar to what we're in now, except it's self-inflicted, the S&P had consecutive days that looked like this: down 4%, down 0.1, down 6.7, up 4.7, minus 4.4. It flip-flopped. This run has a little feel to that as well if you're playing the market on a daily basis. If you're just buy and hold, if you're the Dave Ramsey kind, which I suggest that you do, have a big portion of your portfolio in just buy VOO and QQQ and sit and hold it, you're not looking at this daily stuff. But BMO Capital Market cuts its S&P target for the end of the year. We are revising our 2025 year-end target down to 6,100. They were at 6,700. We're also revising our 2025 S&P 500 target down, earnings per share, to 250. I just told you a 250 to 260. I put that 43.35 uses 255. They're dragging their earnings per share down to 250. So they're keeping the multiple significantly high. Despite the downgrade, BMO maintained a cautious, optimistic tone about the longer-term outlook. To be clear, we firmly believe that this too shall pass. But even with our optimism, we can see the expecting an almost 35% gain from the current levels. That's where their old target was. It just seems unreasonable. As of Thursday afternoon, the S&P was hovering around 5,300, and we would need to climb 15% from the current level to hit BMO's new target of 6,100. So, again, you could see 17% down if the multiple and the earnings per share come down, but you could see it go up. That's the point. And as this administration, Scott Wapner puts this so beautifully, Secretary Besant has made a lower 10-year yield a top priority. He did. Yet it's the administration's own decision-making that's rolling the bond market and sending rates surging. It's their own decisions. Even more interesting considering Secretary Lutnick, his decades-long history in the bond market with his former firm Kantner. They know how to manipulate this. They know what they're doing. Not to mention the irony of the stunning DXY move, the dollar and Bessent's Soro GBP pedigree. Again, these guys are experts. Both men clearly understand the dramatic moves in both asset classes and what each means. Is Trump not listening to them? Or were these guys better on the side of Wall Street than they are in policy? I don't know which one. But I guarantee you there are discussions that's happening. And these guys know exactly what they're doing. They just aren't telling anybody. They tell you what moves they're making. It just completely confounds you because, again, if you wanted lower interest rates, you know how to get them. You got them the other day. Okay? Maybe it's not that. Maybe the plan is to tax capital gains. Okay? Taxing capital gains is more profitable than the entire world. Annual capital gains, $1 trillion in taxes. Tariffs, $730 billion over the year. That's the new ones. So maybe they're just pumping and dumping. You know, maybe Bill Ackman is screaming while he's shorting the market again. And maybe he's going to have a ton of capital gains to pay. Maybe Marjorie Taylor Greene is on that Signal chat. And she knew to buy $275,000 on margin on Monday. Maybe she's out. Maybe she's paying. Maybe there are certain people who are benefiting from this, and this is raising some tax revenue. Okay? A key level is 5670. That would put you at 567 on a SPY. Okay, I'm using SPY because it's the easiest to go with the S&P. And I get my triggers from some other technicians and stuff, but the key level is 567. Where does 567 put us? 567 puts us where we were on Liberation Day. Okay, that's up here in this area. I forget which actual day it was. But if the market can't get back to that level in the near term, it's going to be a problem. And where are you trading today? 526. You've got a big move up that needs to happen because if we can't get back to that level, what do you have? You have lower highs. And that's the trend that you're in right now. If you can't make this move up, that's the trend that we're in. Because right now the weekly doesn't look good. The short term doesn't look good, and it doesn't look good. It's too soon to load in. I may have gone halfway in yesterday, where I should have just stuck the tip in. But again, I don't know what the administration's plan is. Could a pullback on CapEx for the AI? Could it be positive? We talked about it yesterday. Google said they're pulling back on they're keeping their capital spending. I shouldn't say that. They're keeping their CapEx the same, and they pre-announced that. But Mag 7 was down 5% yesterday, the MAGS. So Gerstner put out a tweet, Google holding the line on CapEx. As I said tonight on CNBC, tech CEOs are ready to run. That's why today's tariff clarity was critical to maintaining our leadership in global AI. Smart targeting tariffs plus trade deal with China plus tax deal will extend U.S. national advantage. All of that needs to get done. The market's telling you with the bond rates and stuff, they don't have faith or they're just confused. And Wall Street hates confusion. So as stock investors, we just have to look at it and we have to say, okay, we're going to pick our battles. Now, one battle that I think is done is United Healthcare. I pulled this one out of the core portfolio, and if you want to follow the core portfolio, go over to Linktree. Okay, this is free. You can follow the core portfolio over here. Now, this has 33 positions because we just pulled out Dell. Okay, and if I just look at the history of this, if I go down here and look at the history, I don't think I can do it. Let's see. I pulled out UNH. We're going to look at this. We're going to look at Dell, Payda Technology. I think it was in December, if I'm not mistaken. UNH sold 100 shares December 17th. Okay, as the CEO murder has focused light on the industry and specifically the company, I no longer think it can stay in the core portfolio. Well, I hope most subscribers are out because I was out well before this. I kept it in the core portfolio as the leading healthcare stock, but at this time I have no faith that anything other than negative catalysts are in the name. Therefore, it's time to cut this. I think that news is over, and I think it comes back. So you know what? We're putting in a buy. I'm going to put in UNH, and this is how I do it. 100 shares. And I'll say, explained on the podcast today. And we're going to take a look. We're just going to put that in there. We'll alert all 1,000 subscribers that it has. But we're going to look at the stock here. Now, did I wait for the 4-hour algorithm? No. Am I buying it at a top? Yes. And part of the reason I do that in the core portfolio is to show you. You don't time this stuff. You just don't. Now, it doesn't make sense for you to buy it at this time because it has run too much. It absolutely has run too much. But the core portfolio is about names that I feel that you can trade into and feel safe. Now, in this market, there's not a lot of those names, and those names are not the names that you should feel safe in this market. But VOO is in there, Berkshire is in there, QQQ is in there. So the long term, again, if you just look at this one, we'll compare this to SPY. You know, we're still beating SPY by quite a bit. You look at 1 month. Let's compare it to SPY. SPY is down 6%. The core portfolio is down 3%. Look at 3 months. Okay. The core portfolio is down 7%. SPY is down 9%. Look at year to date. SPY is down 6%. The core portfolio is down 4%. So it's a good mix of stocks. That's what it's about. I would never manage a portfolio like this because it's 100 shares of each of these 34 positions, okay? It's going to have 34 by the end of the day, at the beginning of the day. But I like UNH. When you take a look at a weekly, it has turned around. The MACD is reset. It's low. It could be going for another leg higher. I would rather see you buy it at around 550, in between this 550 and 450 range. They have earnings coming up next week. But I'm adding it back in. Okay? And someone is buying GameStop in a very similar style to Roaring Kitty's 5,000 block style. $31 for May 16th, $32, $33 for May 16th. Does that make sense? Well, if Roaring Kitty comes out, you know it's popping. We're up 1%. You're at 25. That would be a 20% move to get up to 30. It's not bad. Not bad. Not bad at all. Find a strategy that works. Does a 65-minute work? Let's look at the 65-minute. Well, over the past 8 months, you make 18% versus 14% buy and hold. Maybe the 65-minute works. It has you in here at 24. So maybe set some alerts on that one. Maybe the 1-hour stock battle works. Let's look at it. It doesn't. It doesn't. So find a strategy that works. You can typically just run your variance explorer to look at the time frames that work. Trendspider is so good at things like that. Now, earnings. JP Morgan beat. Okay, we can look at JP Morgan. I think it was up 2% when I saw it. JP Morgan's down 1%. Maybe something happened on the call. I don't know. Maybe the markets took a little leg down because it does look like there's the red. BlackRock here, BLK, up 1%. They beat. They had a good one. One that I just bought, that I told you that I just bought, Wells Fargo, they're down another 1%. They actually popped because they beat, but their earnings per share missed. But I still like this stock. Again, I bought it before earnings. I like this stock. It's down 1%. I forget what I bought it at, but I bought a good amount of it. It's a strong buy in the quant. The valuation is there. We can look at it. You know, JP Morgan were down 5% in prayer. The number one bank in the U.S. Wells Fargo was down 1%. The lender reported 6% year-over-year increase in Q1 net income, despite a 3.4% drop in total revenue. Income's up, revenue's down. This quarterly net increased income slipped. That's why it's down. That's a key bank figure. Net income slipped 6%. That's not good. But they reaffirmed its 2025 net interest income outlook. We support the administration's willingness to look at barriers to fair trade. Though there are uncertainty risks associated with such significant actions, timely resolution will benefit the U.S., would be good for business, consumers, and the markets. Shares of Morgan Stanley down. All of these were up before I started this podcast. So I don't know what happened. Maybe they pulled guidance. I don't exactly know, but it looks like the banking sector took a leg down. Something happened. I don't know. Looks like futures are still up, though, slightly. Again, earnings season, you had Wells Fargo, you had Morgan Stanley, everything. Next week starts a big earnings season. I mean, let's take a look at next week. Next week, you have Goldman Sachs on Monday. I bought that one. You got J&J, Bank of America, Citigroup. I think I bought those. Interactive Brokers. You have the United Airlines, ASML, KMI, Kinder Morgan. You got Taiwan Semi, overnight. You got Amex. You got Schwab. And you have Netflix. I like Netflix. I mean, Netflix is one Thursday that I like. You look at it this way. Their earnings per share, $4.27. Okay? Estimate, $5.73. Any pullback on this one, I think you buy. It's a big number. Okay? I like this to reach 1,000 again. They're not super intense. There's no tariffs on this. So I like this one. But again, you're in a crazy, crazy market. Who knows what's going to go on? Maybe they say, hey, we're going into a recession and we can't predict our subscriber growth. And that would be bad. What did it do? Let's see, this time last year, April of last year, let's pull back and look. Look at those earnings. Those weren't good. They were high expectations. You gapped down. But don't you wish you bought this at $600? So there's the podcast. I'll have another one paid, a paid one. I'll probably do it separately today just because I don't want to add it on. So it'll be a separate email. Over the weekend, I am going to do that. The summary for Trendspider, I'll try putting it together today while I'm watching golf. I hope you have a great day. I hope we end up green. There are quite a bit green numbers here in the core portfolio. You've got, let's see, IBIT. Bitcoin's up 3%. You got NPLX up 1%. Energy looks like it's going. Nvidia's up 0.43%. You got Taiwan Semi up 3%. You got Exxon up 0.1. Exxon's back over 100. I told you during a good time, Exxon is actually a $120 stock. $120 stock, I think. So, if you have any questions, hit me up. Everything's on Linktree. Again, over the weekend, I would try Trendspider or that gold article. That gold article was really good. So if you want to read it, just let me know. Okay, see you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.